All right, we're up and running again. So we're back for week 2 with Hamish Foletta at Sarto. Thanks, Hamish. We've had a good chat before we've got online about the challenges of homeschooling kids and the new world we live in. But thought another opportune time to, so I suppose, talk about the markets more broadly without much of an agenda, rather than to think about what's actually going on in the market at the moment, what we're seeing. I think maybe before we jump in, we're always mindful of ticking off compliance. Hamish, I know we don't like doing it, but we probably should say what we need to say in terms of disclaimer. So over to you for the most exciting part of this briefing this morning.
Right. All right. Thanks, everyone. Good to be back. I can't believe it's been a couple of weeks. Feels like a lifetime. But anyway, so yeah, just formally, the information contained here is general advice only, focuses on research undertaken on the financial product, but is not taken into consideration any individual or group of individuals' personal circumstances, objectives, or financial situation. So with that,
it is. Well, I think one of the things we do notice is in addition to your disclaimer is that every person is different, and that's what we're seeing in circumstances at the moment. Every person's individual circumstances are different, and that's why it really is important that we have conversations. If there's something in this that resonates or you want to ask questions about, please make sure that you ask us. But one of the things we were talking off air about before, Hamish, was just that sort of roller coaster of investor emotion that we're seeing play out almost to script with and as you said in your last briefing about we've got a pretty good track record of what markets do in times like this. So maybe without sort of rehashing what we spoke about 2 weeks ago, maybe reinforcing, because I think it is worth reinforcing the fact that this is a cycle and this is a motion that we've seen before.
Absolutely, yeah, for sure. So, my comments were previously that the bottom of the market most likely happens at the time of maximum uncertainty. So not maximum bad news, but maximum uncertainty. And I think if we go back, it was almost a month ago now when the markets were at their lows. My sense is that was the point of maximum uncertainty, in that we hadn't seen the government. Everybody knew that the situation with the virus was going to get worse, but we hadn't seen any of the government initiatives to support the economy. We hadn't seen any central bank initiatives. So things were very uncertain back then, and I think that's why we saw that extreme fall that we saw in the market. Last time we also talked about, after a crash, it's typically a 4-step process for the market to bottom out. So you'll usually have your panic oversold condition, and my sense is that we've seen that first step. You'll then have a relief rally, which it would seem that we're seeing at the moment. You'll then typically have a sell-off at some stage, and that then forms the base for the market to sort of broadly move higher again. So I think, the market has been very strong since we spoke last time, and I think there's generally some uncertainty in terms of why the market is rallying when we know that the economic data is going to get a lot worse. And, we were just talking about this off air, that the market is a forward-looking beast. So it fell in anticipation of the bad news that was happening. But at the same time, the market is looking forward to try and anticipate the recovery. So whilst it's you would expect that there's going to be bumps along the way here, the reason why the market has rallied from where it was a few weeks ago is because, it's sort of starting to see the initiatives that are in place to support the economy, support companies to try and sort of get out the other side.
with that, Hamish, I suppose you'll see it stock by stock. They'll all be a little bit different when they start reporting their guidance and their earnings and how they're actually performing. But the thing that I think is hard for people to reconcile with is that they might produce some figures that look terrible, but their price on the day and in that week might still go up because they've already been priced in for even worse circumstances than what they've actually incurred. So,
absolutely, Ben, and I think often that's a really good sign of the bottom in a stock is if you see it come out with some really bad news, but the share price actually doesn't go down. That's typically a sign that it's all priced in. Obviously, the banks are within the portfolios, they're probably the more exposed stocks to the issues that we're seeing. And Westpac sort of had some bad news, didn't really affect the price. In addition to that, there was a lot of discussion last week about how much dividends will need to be cut, and banks were actually able to hold on to their previous low, not make new lows, which is perhaps a sign that all of that bad news is starting to get priced in.
Could that be, partly a reflection of the fact that they're pretty damn cheap at the moment, Hamish? So even if the dividends are reduced a bit, the return on your investment is still pretty reasonable?
Absolutely, yeah, exactly right. So, assuming that, there's some risk that they may not pay dividends for this coming reporting period, but that just means that they're holding back cash, which improves their balance sheets and reduces the risk for them to need to raise equity. It just means that the dividends will kick off, whether it's in the next reporting season. So, even assuming, I think sort of consensus is for about a 30% cut to dividends. Generally that's still going to be putting you on grossed up yields of sort of 10% more, which, when compared to cash rates of, 1.5%, it looks extremely attractive.
Pretty damn good. Yeah.
Hey,
so yeah.
Oh, sorry.
Sorry, Joe.
No, I was just going to say, just sort of going back to one of the points you made earlier about the sort of history of indicators with the relief rally and potentially the market, testing those bottoms at some point. Is there, again, this is a question without notice, but are there indications of what precedes that testing of the previous bottoms? Like, is there what does history suggest is the precipitating factors to actually have another crack at testing those bottoms before things begin to level out even further, if that makes sense?
No, it's a good question. I think just a few things that come to mind. One would be businesses raising equity. And we've already started to see that, but if you continue to see sort of an avalanche of that, then you would think that people sell other stocks to take up those discounted equity raisings, and that sort of pushes the market down. I think in addition to that, just the general reality of, what is expected to be a tough economic environment for a little while. My sense is, the big unknown here now, particularly in Australia, is how we go about opening the economy back up. And as we do that, do we continue to sort of see outbreaks again? And so my sense would be, if the government sort of says, okay, well, we can start getting back to work and whatnot, that's positive. But then if you suddenly see an outbreak again, and then they have to go into lockdown again, then, that potentially another shock that the market sort of has to get its head around. So my sense is that when we saw the bottom of the market a few weeks ago, it was extreme uncertainty, which created panic and an oversold condition, relief rally, and now it's more just sort of the harsh realities of what's coming that sort of could create sell-offs in the coming weeks or months.
In that context, part of our conversation early before we went on air, Hamish, was we're sort of talking about people's now reverse panic about thinking, I've got to get in while it's cheap, I've got to get in now. Again, what we've just been talking about, there's a fairly good chance, and no one can predict, but there's a fairly good chance that the recovery is going to take a little while. Would that be fair? There's a fairly good chance that there'll be another bit of uncertainty, something else will pop up and it'll pull back a bit. And so we don't have to be greedy and think, I've got to get in now, I have to do it today. We can actually be patient and just gradually be moving in. And our philosophy generally is you sell slowly, progressively, and you buy progressively. You gain, average in, average out. And again, we personally talk about that a bit. Don't put it all in now, let's spread it over time. Yeah. We take that philosophy, it will be better in some point in the future, but it ain't going to get real good quickly. Yeah. So let's just work our way back into the market without greed and the fear we're going to miss out. And I think we'll all be okay.
Yeah, completely agree, Peter. I think that is so important. At the end of the day, we can try and guess what the market's going to do as much as we like. The reality is we don't know. We could have a pullback from here, it may not. I think, my message to clients, which, I think is similar to the way you approach it, is if you're looking at putting money into the market, do some now, but don't do it all now. And I think if you have that approach, it's going to work out okay. I think the other thing as well, though, just to keep in mind, I'm hopeful that we do see some equity raisings, which gives retail investors a great opportunity to buy heavily discounted shares. So I think some clients have there's some smaller positions in QBE, which announced an equity raising yesterday. But, the banks potentially have to do it. If they do, that will be a wonderful opportunity. Maybe something like a Transurban. So, that I'm hopeful that we see those sorts of things, and that would be another great opportunity.
With that, Hamish, did you want to just briefly touch on what that essentially means in really layman's terms? I suppose that, let's say that Transurban's worth, I haven't got it in front of it, let's say they're worth $12, that they will come and offer you, if you're an existing shareholder, some at $10 or something. That's what you're saying there, isn't it? That's
exactly right. So essentially, the balance sheet may have become a bit stretched and the banks want them to raise some equity to pay down some debt. So the company will go and issue new shares. And your example is absolutely right. So Transurban $12, they might say, right, we're going to issue new shares at $10. So the retail investor gets the opportunity to apply for new shares at $10. And that can be a really low risk way of increasing exposure, because you can see your Transurban at $12 and you can buy it at 10. And so it's a risk-free way of increasing your exposure.
Which probably links back to what you were saying before about this potential for a little bit of a sell-off again, is that if a lot of companies start issuing shares under what their market value is, that the $12 price will probably come back down towards the 10 on the market. And if a lot of companies are doing that, then naturally the market reduces for a period of time while that settles.
That's exactly right. I think one other catalyst to Jay's question before as well, in terms of what potentially would create a sell-off. Again, we're just speculating here, but perhaps the people's ability to access super. I wonder whether industry funds will be forced to sell assets to fund those redemptions, and that could potentially create some opportunities there as well.
Yep. Listen, I'm mindful of time, Hamish. I know Peter's got to chuff off to another appointment, but listen, thanks again. I know we wanted to keep it short and sharp. It's about 10 minutes this morning. Again, let's look forward to reconvening again next week. If anyone does have any questions, as we've said previously, please make a comment below in our group or shoot us a message. But thanks again, Hamish. We really appreciate your thoughts, your time, and everything that you're doing for us as a business and all of our clients. So thanks again. Peter, Ben, did you want to add anything else before we close off?
Let's enjoy a couple of weeks of school holidays in New South Wales with your family, mate. Enjoy it.
Thanks a lot. And yeah, thanks again. And if anybody has any questions, please send them through, and more than happy to address those individually.
We'll chat again really soon.
Thanks very much.
Thanks a lot. Cheers.